So there's been a lot of content in the fintech and banking world around open banking and how open banking would affect Nigerians. But I don't feel anyone has broken it down to the level of people's understanding. Like most people don't really understand how open banking will help Nigerians. Most people don't even know what open banking is. So in this video, what I'm going to do is I'm going to talk about open banking. I'm going to use this whiteboard to illustrate what open banking is, and how it will affect Nigeria and how it will affect the Nigerian housing sector in particular. So stay tuned if you want to know about open banking and if you want to understand how open banking will affect the everyday Nigerian moving forward and how it will affect the housing sector in Nigeria moving forward. Alright, so open banking refers to bank sharing customer data. So it refers to financial institutions sharing customer data between themselves and between organizations that a customer authorizes an institution, whether it's a small business, whatever company, to access. So it basically allows a customer allow another organization or an organization to access their data to use it for whatever means they want to use it for. So let me just quickly illustrate how that looks and how banking was or is currently before the launch of open banking, which is going to be coming out in August. I will drop a link to the article stating that. So this is how banking was. So you had a customer. So this is a customer here. This is a customer here. Then you had a, let's say, financial institution 1. So this is financial institution 1. You had financial institution 2. You had financial institution 3. So this customer, most likely, in Nigeria now, we have like lots of accounts. So this customer probably has an account with this financial institution, has an account with this financial institution, and has an account with this financial institution. But this is the important part of open banking. This customer, let's say there's an organization like GIDA that wants to maybe process this customer's housing purchase. So there's GIDA down here. So this is GIDA that wants to process a customer's housing purchase. We need to assess how worthy the customer is. Like, is this customer going to default on their loan if I'm giving them a loan? That kind of stuff. So what GIDA would need to do is GIDA will need to go to this financial institution. The customer will give us maybe their bank statement. Go to this financial institution. Go to this financial institution to collect different records of the customer. And another interesting part to this is that there are so many financial institutions that don't really submit customer information to CBN. So at least they don't submit it regularly. So what that means is that you have a very skewed, GIDA now has a very skewed view of this customer's financial capacity. So we're now wondering, can this customer actually pay back this loan they're going to get, or the house they're going to buy? Can they actually afford it? What open banking does is that this is the interesting part of open banking. So what open banking does, rather than doing that, open banking would make it so that there is one place, there is one source of truth for this customer's information. So all the banks, financial institutions would be submitting this customer's information to a common portal. To a common portal, so that now when an institution like GIDA wants to look at a customer's information, we won't be going to meet this financial institution. We won't be going to meet this financial institution, and we won't be going to meet this financial institution. All we will do is that GIDA will just come here and ask this particular portal where all the financial institutions have submitted the customer's information. GIDA will just plug into this system and access the customer data. So that is what open banking does. It makes it makes visibility of transaction history very easy. And open banking, you're able to assess a customer's credit worthiness very easily. And I'll talk about the benefits of what open banking will bring to Nigerians, since most people don't really know. They know about it, they've been hearing about it a bit, but they don't really know how does it benefit me as a Nigerian. Does it only benefit financial institutions? No. It's going to benefit you directly as a customer, and I'm going to tell you about how that will benefit you. But this is how open banking works. Rather than us going to different financial institutions, we can just come to one portal that has the single source of truth of a customer's information. So up next, I'm going to tell you about how open banking benefits Nigerians, and then I'll tell you about how it helps the housing sector as well. Okay, so let's look at the different benefits. We'll look at the different benefits and we'll look at the benefactor, that is the people that it is benefiting. So the first benefit is you have more credits or loans. So because banks and financial institutions and fintechs now have a better view of people that can actually afford their loan products, they will give out more loans to people. So prior to this, a fintech or a bank, particularly in the mortgage sector for housing, was a kind of manual. So people can actually, some people looking through like a bank statement to try and evaluate if someone can afford a loan, and then for that kind of thing can cause mental cramp or laziness, where people are just like, this person doesn't look like they can afford it, they will just go. But now banks and financial institutions can actually evaluate whether somebody can afford a loan, so they will give more loans out. The second benefit, and this benefits customers and it also benefits the banks. Customers, because now you have access to more capital, more loans. For a businessman, you have more access to more loans now, because banks and financial institutions can actually see whether you can afford to pay back the loan. So reduce processing time. So prior, as I said, sometimes banks and financial institutions will be looking at bank statements. Some of them will look at bank statements to see whether you can afford a loan. So they didn't have a total picture of people's affordability and what people could actually afford and whether they can afford to repay back their loans. So a lot of them will hold credits or hold loans and deny people loans that could have afforded it. But now there's data, it's open, so everyone has access to the information of your transactional data. They can see whether you can actually afford a loan. And this benefits obviously customers and banks. So the processing times will go down a lot, because rather than going through statements, you can just have it on the system, automated. So the other one is streamlined mortgage application process. So if you're doing like a mortgage application process, you need to submit a lot of documents. You need to submit your pay slip, you need to submit bank statements, and there are a couple of more documents, something like employment verification. With open banking, you can just basically plug into one technology tool and have access to that customer's information. So the customer will probably just give you their BVN, and then with that BVN, you're able to get what their salary is, whether they can afford, the house that they're trying to buy. All that is even their employment verification. You can tell if they can tell where they're employed because the employer is paying them. So you can tell it's coming from this particular employer. You can tell whether it's working for government. All those kind of things are things that you can tell. So that helps reduce the processing time of mortgages. Because mortgages, before, people will go through like a bank statement, as I said earlier, but you don't need to do that anymore because now it's automated. That will drastically reduce the time it takes to process a mortgage here. And this benefits customers because, you can get your mortgages faster, and also benefits bank because now they can turn over faster. Another thing we'll see is lower default rates. So default rates will go down because the financial institutions will be doing, and default rate means that someone gives you a loan, a financial institution gives you a loan, and then you can't pay back the loan after some time. So this will go down drastically because now there will be more thorough risk assessments. So a financial institution will look more thoroughly at the customer. They have a more holistic view of a customer's affordability and their ability to pay back a loan, their capacity to pay back a loan. So I think you see this go down drastically, and this affects customers, it affects property developers, and it also affects banks. Property developers in the sense that they give out payment plans. A payment plan is essentially a loan. A payment plan is essentially a short-term loan that maybe is 0% interest. So that's what the payment plan is. And banks, because obviously they are giving out money, so they don't want their customers to default because they make interest on the money they are giving you. So if you default, then basically they have lost their money and time. And customers, it benefits you as a customer because you actually don't want to default on a loan, especially if it's a housing loan like a mortgage, because people can take back their house. If you default on a loan for consistently for a period of time, let's say 6 months, depending on the financial institution you got the loan from, they can take back the house from you, and that's basically you moving out, going back to renting, which is maybe not the best idea for you depending on your stage in life. So you don't want that. So this helps you as a customer avoid that. The last thing we'll also say is tenant verification. So tenant verification in the sense that a landlord doesn't need to tell you bring your bank statement anymore, a landlord can, with this open banking policy, they can visually see on a dashboard what you're paid. They can see if you can afford next year's rent, because that's what landlords really care about, is can this person afford next year's rent and where do they work. A lot of landlords care about where you work too. So with open banking, a landlord can see whether you can afford the next year's rent. You can see what you can afford. You can see your pay, so they have an idea, and not just your pay but also your income from other sources, so they can see whether you can afford their rent today and next year. Maybe you just hammered this year, and landlord will be like, I don't want this person, and maybe next year you won't hammer, so you probably want consistent income. So the landlord now can do tenant verification where they can see your consistent income over time, and this will benefit two people, landlords and customers. So it benefits landlords because they can see whether you can afford the rent consistently. So that is how it really benefits landlords. The landlord can see that, okay, this person can afford the rent consistently. They can see where you work. They have better security and safety in your ability to pay your next year's rent, because the landlord really cares about, okay, this person has paid me money today, most likely annually in Nigeria, but can they pay me for next year? Do I need to go and start stressing looking for another tenant, working with agents? They probably don't want to do that. So it benefits customers because one thing that landlords do, I know Lagos is pushing to ban this. I don't know if they've really formally banned. I think they have formally banned it. Is 2 years rent. Some people collect 2 years rent. Some people collect 3 years rent. Some people collect 5 years rent. And the reason why landlords do that is because they want to de-risk the future. So they rather collect all that money today, rather than in 2 years this person may not be here anymore, or maybe the person cannot afford to pay it anymore. So you should see, hypothetically speaking, you should see less instances of landlords saying pay me in 2 years, because now the landlord can see whether you can afford next year's rent based on your income, based on your finances. They can see whether you can afford next year's rent. So they won't be asking you, or they shouldn't be asking you for that anymore. So these are the benefits and these are the benefactors and how it affects the housing sector. It really affects the housing sector in lots of ways. It affects its internal verification. It affects it in lower default rates in terms of mortgages. It affects the mortgage application process, making it far more streamlined. It affects the mortgage processing time, which is very important, because this is one of the key reasons why there are not a lot of houses or mortgages in Nigeria, the processing time. So it's going to bring that processing time down. And it also means that people can give out more loans. Financial institutions can give out more loans to people, which will create more credit in the economy, which will create more prosperity for my beautiful Nigerian people. So this is how it affects it, and that's what open banking is. If you want more content like this, if you want more content on the housing sector, on the fintech sector in Nigeria, follow me and I would basically keep on talking about this every day. I'll probably be shipping out about 3 to 4 videos every week. So follow me and I would be your guy for housing, prop tech, and fintech in Nigeria. Cheers.